All right. So how can you tell whether to invest in a company from its balance sheet? Great question. So when I'm analyzing um, a company's balance sheet, I always go to Morningstar because it has all the information. So I'm just going to show it to you right now. And let's say I do Starbucks. Okay. All right. Bad typing there. So then you would go to Starbucks and you click financials. So your question just revolves around balance sheet, but when I do my analysis, I look at income statement, balance sheet, and valuation tab here as well, and key stats and insiders. So I look at it from multi-dimensional perspective. So when you look at the balance sheet, the most important thing obviously is cash, because if a company does not have sufficient cash, it's going to go bankrupt. So if you're investing in a company that is distressed, you want to look at cash. Second, you want to look at liabilities, especially debt right here. So Starbucks right now, as of 2016 September, has 3.2 million in debt. The cash is increasing, which is good. So when you look at debt, you want to look at the amount of debt relative to your equity. So if you Google debt to equity ratio is what I'm talking about. So right now you'll see that the total liability is 8.4 million and total equity is 5 million. So the equity is slightly lower than the liabilities, but given the amount of cash Starbucks has, I would consider that to be okay. So other than that, it's pretty much it. You can keep it pretty high level because most of the time you would be paying attention to the income statements and the earnings per share and the revenue growth and the net income growth and so on. The other thing you would look for is to see if management has capitalized anything weird. So this is more in-depth and advanced, but basically you would look at the goodwill and intangible assets to see if there's any significant fluctuations. So for example, 2016 September Starbucks, they recently impaired one of their brands called Tivana. So if you're a Starbucks customer, you probably know it's their tea line. And the Tivana store itself isn't selling that well. So during the year, Starbucks actually took a significant impairment of around 200 million. So it will be 200 here. That it should go down. So the statements hasn't reflected this yet, but you would expect the assets here to go down by 200 million. So this is what you would look for when you're trying to invest in a company, and that's what you would think about when looking at their balance sheet.